What's going on, everybody? It's Blake here with Trade Tracer. In this week's video, we are going to get you prepared for the week ahead, show you how I am approaching the market, and give you some trading tips. As always, none of this is financial advice. Always trade and invest at your own risk. So let's go ahead and get started here. We have the S&P, the SPY, pulled up here on a daily time frame. And just to point out what's happened over the past few days, we are in a 3-day uptrend and bull flagging near all-time highs. Now, in last week's video, we actually broke trend. All right, so last week we broke trend, came below, closed within the cloud, and we were saved by this anchored VWAP. This is the year-to-date volume-weighted average price. So this is the average price where the majority of shares have traded hands, where people are holding from since the beginning of this year. And so that came and saved the day. And if you remember, I said Friday, the odds were favoring lower. We were in no trend. The priority was preservation of capital. But if you remember, I said it doesn't matter what happens next. I don't need to be able to predict the future in order to make money in the market. All we need to do is protect our capital when we go into no trend, which is what we did on Friday. And I said all we need to know is once price closes back above the 10-day simple moving average, which is the top of this cloud, I am going to get long again. And on the next uptrend, I'm going to press. That is precisely what I have done. And we've done that with the NASDAQ. And the NASDAQ is now once again leading. So on Tuesday, because the market was closed on Monday, Tuesday we came in from that Friday, gapped higher, and then we actually gapped right at that 10-day moving average, which told me that there were buyers present. And then we pushed strong all day. And I said if we close up here, which it looks like we will, I'm going to get long TQQQ calls. Those calls are now over 70% ROI from our entry on Tuesday. So you didn't really need to do much. All you had to do was get long when I said the time was to get long, when odds are back in our favor, prices back above that 10-day moving average. So we got long on Tuesday, and we're still holding long versus our runners. Now, a couple things here that we need to point out is that the NASDAQ, once again, is leading. We have a MACD bullish crossover on a daily time frame on the NASDAQ. So what was lagging before is now leading, and I like when the NASDAQ leads, specifically because they're made up of the high, big cap, big tech names like your Apples. Obviously, you guys know that we are long Apple. Apple is breaking out to new all-time highs in a huge cup and handle formation with the MACD cross. I think Apple goes much higher. Now, we do have a lot of tech earnings this week, so don't risk capital into an event risk like earnings. We just don't do that. Amazon is another one. All right, Amazon has this massive volume shelf that we just closed above. See this huge volume shelf, and typically I like to anchor it from these highs back here. But either way, still the 3200 level, which I pointed out was a key level, anything above 3200, and we just erupted. And now we're bull flagging near these highs, and if we can get price strength confirmation, I think Apple is going to be one of those leaders as well. Google, right? Everything's flowing back into FANG. Google breaking out bull flag at new highs. Netflix, same thing, had earnings, big gap up. Still haven't filled this gap, but if we can get back above the earnings highs, looks like this is going to be another great setup long. Nvidia, right? These are all the big tech names that make up the NASDAQ, which have just been sleeping now for, let's see, almost since September. Pretty much all of these names have just been asleep since September, haven't done anything except move sideways. So big volume base sets up well for breakouts to go higher. So when the NASDAQ starts to lead like it is, it gives me conviction that this market still has a lot of room left to run. I believe that this market still probably has about another 6% higher before we see another real pullback. And this isn't just based on opinions. This is based on technicals and price structure and price patterns. On the higher time frames, the weekly is in a very strong uptrend. The monthly time frame is parabolic. We're getting new highs with MACD. So when the monthly and the weekly are confirming higher with momentum, that tells me that over the long term, on the daily time frame, stocks are going to want to move higher. Now, if the side was reversed, right, if we had MACD bear cross on the weekly and the monthly, I'd be thinking things are going to get a little uglier. But since the higher time frames are confirming this price strength, regardless of what this looks like down here, the daily time frame is going to try to trap bears and is going to rip higher. So when we have these break of these trends, when we break trend, right, like we did on a Friday, on an OPEX Friday, and it looks like, okay, now it's finally time for us to pull back a little bit and maybe test the bottom of this cloud. Nope, we're in a strong bull market. We're going to gap up on Tuesday and then just gap up the next day and rip higher again and trap all the bears. Okay, this is a bull market. This price structure is bullish. I remain bullish, which is why we are bullish in our long-term investment portfolio. That's all I got for you guys. Hope you enjoyed it. Hope you took away a few nuggets here. See you on Monday.